Hello everyone, my name is Ivan Volkov. I am the manager of transaction services in deal advisory at KPMG in Ukraine. And today I'll walk you through the key events, trends and insights shaping Ukraine's M&A market over the past 9 months of 2025. This is KPMG M&A Radar, the 9-month edition. Let's dive in. Ukraine M&A market has demonstrated moderate growth in the last 9 months as market consolidation trends continued even amid challenging wartime environment. 9 months 2025 saw a total of 45 transactions with a combined disclosed value of $806 million, a 22% increase in deal volume and an 8% increase in disclosed deal value compared to 9 months 2024, up from 37 deals and $746 million respectively. Limited market transparency, a common structural feature in Ukrainian deal making, continues to have an effect on deal disclosure data, with the share of transactions listing deal value declining from 59% in 9 months 2024 to 53% in 9 months 2025. This relatively low transparency rate suggests that the actual size of the M&A market may be higher than reported. Two significant transactions exceeding $100 million jointly accounted for 56% of total disclosed deal value in 9 months 2025, driving overall market growth. The first, agritech and food company MHP's acquisition of a 92% stake in leading Spanish poultry and pork producer Uvesa as part of a deal worth €270 million. The second, Kyivstar's $155 million acquisition of ride-hailing and delivery services company Uklon. Domestic M&A activity continues to form the backbone of the market, accounting for $442 million of total deal value, up from $212 million in 9 months 2024. This represents approximately half of the total deal value for the period, almost doubling the domestic deal-making ratio in 9 months 2024. In terms of volume, domestic deals represent 73% of total transactions in 9 months 2025, up from 51% in 9 months 2024. Sectoral trends have remained consistent with H1 2025. Overall domestic M&A activity comprised 5 innovation and technology deals, 12 real estate and construction deals, and 6 agricultural transactions, with these deals collectively accounting for 85% of total domestic deal value and 70% of deal volume. The remaining 10 domestic deals, worth a total $65 million, were distributed across other industries. Outbound deals in 9 months 2025 have continued H1 2025 trends, contributing 40% of total deal value, $329 million, across 5 deals that represents just over 10% of total deal volume, an increase in value and decline in volume compared to 9 months 2024, which saw 10 deals with combined disclosed value of just $85 million. This growing discrepancy in outbound deals value and volume reflects the impact of the largest transactions in the current period, namely MHP's aforementioned acquisition of a 92% stake in the Spanish meat company Uvesa for €270 million. Outbound M&A deals were similarly concentrated in agriculture 2 deals and innovation and technology 3 deals. Inbound M&A activity slowed notably in 9 months 2025, following strong performance in 2024. That was driven by the twin effect of IT firm Croatia's $200 million funding round and NGG Capital's $120 million acquisition of telecommunication company Data Group Vola. By contrast, 9 months 2025 saw 7 inbound transactions with a combined disclosed value of $35 million versus $448 million in 9 months 2024. These deals were mostly concentrated in both the innovation and technology and transport and infrastructure sectors. Despite persistent wartime risks, local dealmakers continue to adopt and sustain activity, with growing interest in M&A potential in defense sector. If current trends persist, M&A market growth indicators for 2025 are expected to be broadly in line with those of 2024. As we move into final months of the year, we'll keep tracking how these trends unfold. The annual KPMG M&A Radar Ukraine 2025 will be published in early 2026. Follow our updates to stay ahead of the insights. Thank you for your time today and have a peaceful day.